Hi everyone, Bill Lethman here for MoneyEvolution.com. In today's video, I'm going to be talking about the three kinds of retirement savings. So this video is part of a series that I'm doing all to help you to create your tax plan for retirement. If you've watched some of my other videos, you've probably heard me talk about what I call the 7 core elements of retirement planning. Well, creating a tax plan is one of those 7 core elements, and maybe one of the most important of those as far as your retirement lifestyle is concerned. So when we're talking about saving money for retirement, there's 3 primary buckets that we're going to talk about here today. Bucket number 1 is what I call the tax now bucket, or the non-retirement account asset bucket. So you know if you've got money in the tax now bucket, if you get that 1099 form at tax time, that's going to be where you're going to see all of your dividends, your interest, and any capital gains that that account earned throughout the year. And you're going to have to pay taxes on that. So because you have to pay taxes on that account every year, those account balances are never going to grow to as large of an amount as the other 2 buckets that we're going to talk about here today. You've got to pay that tax, and you've got to take the tax from somewhere. So assuming that money is coming from that actual account, that's going to reduce the account balance every year by the amount of those taxes. The second bucket is what I call the taxed later bucket, or the traditional IRA or 401k bucket, and that's probably the one that most people are familiar with. In fact, that's actually probably where most people, maybe even you, have the bulk of your retirement savings. And basically, the traditional bucket is where you got to maybe defer taxes up front. Maybe that money came right out of your paycheck where you didn't have to pay any taxes. And then you also get to enjoy tax-deferred growth on that account until hopefully the time you retire, when you start taking withdrawals. In retirement, when you start taking those withdrawals, you're going to ultimately have to pay taxes on all of the money that's in that account. And one of the things I want to talk about here is kind of this myth that we've all been led to believe, is that we're going to get that tax advantage today, get to take that off of our income taxes, and then we'll pay taxes in the future in retirement, hopefully, at maybe what's going to be a reduced tax rate. Well, I talk about this pretty extensively in some other videos as to why that just simply may not be the case. We find that most people, or a lot of people, end up in about the same tax bracket in retirement as they were while they were working. The other reason is that we can actually make some pretty good justification as to why we're actually in a low tax rate environment, at least compared to recent history. In fact, the Tax Cuts and Jobs Act that went into effect in January of 2018, earlier this year, that actually put us in a lower tax rate for most people. So in retirement, we could actually find ourselves in a position where we're paying more taxes on that money in the future. Which leads me to bucket number 3, and I think this is one of the areas that maybe just doesn't get a lot of attention, and it's the Roth bucket. This was a little bit later on the scene. I think the first Roth came out maybe in 1997, so it's certainly not as long or as old as the traditional buckets. And basically, there's a lot of restrictions on Roths. For people that make too much money, according to the IRS, you can't make contributions directly into the Roth account, and it wasn't until relatively recently where Roth started to become more prominent within the 401k community. In fact, not all 401k plans offer the Roth bucket, so this is still something that's playing a little bit of catch up here. But basically, with the Roth bucket, you pay taxes initially. I say never tax. Well, technically that's not true. You are paying taxes as the money's going into the Roth, but it's getting tax-free growth all along the way while you're growing those assets. And then in retirement, as long as you're taking what the IRS calls a qualified distribution, you don't pay any taxes on the withdrawals either. So this is something to really think about, is where your tax bracket is today versus where your tax bracket is in the future. And if you're like a lot of people where you might have a lot of your money in this middle bucket here, the traditional accounts, maybe start thinking about how you can get some money over into Roths. And there's actually some strategies that even if you make more than the IRS limits, you can still do what we call a backdoor Roth, where you contribute money to traditional and then move it over into a Roth. There's some stipulations and there's some nuances to that I'm probably oversimplifying there, but there are some strategies. And if you have a Roth 401k plan, that could be another avenue. There are no income restrictions on making contributions to a Roth 401k plan. So I hope this has been helpful, just to get you thinking a little bit in terms of these 3 different buckets. In fact, I put together an entire retirement tax planning case study where I'm going to walk through what I have is 5 action steps, step by step, to help you look at your situation and figure out where there may be some tax planning opportunities that could either reduce some of the taxes today or potentially, for a lot of people, maybe reducing some of those taxes out into the future. So we're going to have a link right here below this video. If you click on that, that'll take you over to the case study. I think that video is maybe a little longer, about 30-35 minutes, but really some great details there with that. And if you like the video that we're doing here today, don't forget to hit that like or subscribe button. If you think you've got some friends that might have some interest in this as well, hit the share button as well. We'd love to get the word out there as we're starting to help people with some of this tax planning. So with that, hope you got some great information out of the video here today, and I'll see you back in one of my next videos. Thanks.